All right, guys, welcome back. Ron here once again. Today's video, I just wanted to go ahead and cover our market internals. Market internals are key. It is a crucial part of trading. If you are a day trader, if you're trading options, if you're trading the markets as a whole, shares, whatever you're trading, man, market internals are going to help you understand what's really going on behind the scenes so you can make better decisions. And I take it a lot of people don't use them or don't know how to use them, but they will help you, and they come really in handy during crucial times where things just look like it's perfect. For example, for a continued rally, but then things just start to go the opposite way. For example, today, you know, we had the markets are were gapping up. Everything was looking good. So you have the E-minis, the Nasdaq, the Dow. Everything was going higher, but for some reason everything just started to come lower, and it's like, well, what's going on here? You know, what is going on here that everything is starting to turn around? And things that can help you out are going to be the market internals. For example, you're looking at the VIX. The VIX is a contrarian signal to the markets. It's going to tell you how the volatility is doing. And when the VIX is rallying, the markets are falling. When the VIX is falling, the markets are rallying. And being that we have this high VIX environment, we're over 18, now over 19. It just came back from 21. I mean, it's really doesn't look like it wants to go back down to 16 just yet, or sub 16. And this is a good indication to you on how busy the day is going to be. How much movement are we going to have for the day? And after we had a day like this last week, where you can see here, man, this thing rallied all the way from 16 all the way to 21. I mean, that was a massive day. This is the 800-point drop day, guys. I mean, this is a massive day, or the 400-point. Let me see which one it was. Anyway, it was it was the good day. If it's a good day, you had a good day when you were trading this. This was Friday, so this is Monday. This is Friday. So the 400-point drop day. But look at this. When you have a day like this, where this thing just has a massive push like this, I mean, there's no denying that there's going to be a continued move higher on the VIX, which in turn signifies a massive move lower on the markets themselves. So when you're taking a look at the market internals, these are the ones I like to use. So the VIX is by far number one. You have to have this one up, especially when trading options, because volatility definitely affects the pricing of options. So you want to know how high or low the volatility is. And when we have high volatility, normally you want to be a seller of options. For our program, we're going to start just with single calls and single puts until we get everybody ready to be able to do more complex strategies. But normally when you have high volatility, where you want to be as a seller of options, but you can do it either way. Both ways actually works. But in the long term, selling options actually does work out better because you're ultimately collecting premium. You're ultimately collecting money, and the probabilities are on your side when you're trading in that format. But looking at this, you can see here the VIX goes high, the markets goes down. So today we had a gap down on the VIX, and then where was it? Right on this pivot. So it's crucial to pay attention. I like to use these pivots. Not everybody uses them, but for me, for example, these pivots are already pre-programmed to show support and resistance levels. And as you can see here, man, this thing opened. It failed to break this support area here twice. So you have a double bottom on the 10-minute, and then this thing started to bounce higher. I mean, that's signal number one. Hey, today's not going to be a rally day. The ad. So signal one, we opened at above 18, and it failed to break lower than that. So below 1850, it could not break below 1850, having a hard time. So the first reaction is, hey, today may be a bullish day because the VIX is falling. So that's what everybody was thinking. Second, you had the tick. The tick open, and let's go ahead and take a look at the tick. And the tick opened above. Where did we open here? Look at this. It opened at 1452, guys. Massive. This is a bullish sign. It's like, hey, man, looks like it might be a bullish day. We're above 500, above 1,000. I mean, everything is ticking higher more than it is ticking lower. But then this is what you get. Like any other indicator, this may signify at some points, a lot of times it could signify, hey, this is a signification that, hey, the markets are a little overbought. And they may start to come down, but that's not always a guarantee. When it opens above 500 and 1,000, I honestly am expecting a bullish day first and foremost. before I expect this to happen. As you can see here, it set the nice little trend and it's coming lower. It's coming lower, and now it's starting to hit minus 500, 1, 2, 3, and continuing lower, and probably going to hit minus 1,000 today as well. So as you can see here, once it crossed 500, it only touched it twice, and that was it. So now it looks like, and then you have this 5-period MA here starting to trend below zero, which also telling you, hey man, the overall market is heading lower. So today is one of those days where you buy or you short the short the bounces. You short the bounces type of day, at least for this part of the morning so far. So that's what I'm looking at here when it comes to the tick. Another great market internal. And again, I'm not going to go into it or what it's looking at. Go ahead and do your research because you're going to interpret it a little bit better than if I give you secondhand information. If I tell you, hey, the tick is measuring the difference between everything that's ticking up is ticking down, yes, that is what it does, but go ahead and look it up, read it, understand it, digest it for yourself so you can understand exactly what it does for yourself. Same thing with the VIX, same thing with the ad. The ad was it's another one great indication here today for you guys. Looking at the ad, again, it opened at a bullish area, but I'm looking at the ad and I'm like, okay, well, what is the ad doing at the open? You know, yes, it opened in a bullish area, but what is its reaction? What is it doing? And the ad stands for advancing and declining issues, guys. And you know, it basically is telling you the difference between advancing and declining issues. So when it opened, hey, advancing issues were more than declining issues, but as you can see here, declining issues are starting to take over. So, and this has a one-to-one, almost one-to-one correlation with the markets. If this is going down, the markets are likely going down. When you have a divergence where the declining issues, or you have the ad going down, and the market's going up, the market is probably going to start coming down at some point, usually within 20 minutes. So this is why it's important to have this up. It's important to look at the ad and not just what it's doing. You want to see how violently it's doing it, and also where it is located. So typically anything above 250 higher is a bullish. It's going to be a bullish day. So if you have a day like yesterday where you see the ad was above zero, above 500, even though it did this, the day for yesterday was pretty much still a bullish day. Why? Because the ad is still on a bullish area, you know, still, you know, above the zero line, which means, hey, we still have more advancing issues than declining issues, you know. But as you can see here, today's scenario, we have the ad is just coming down basically on a straight line lower. Now it's about to get close to zero, and it could potentially keep pushing lower below zero, signifying, okay, declining issues are definitely in charge today. And this is what's going to happen. This is what it looks like. When you have days like this, obviously, you have a strong push lower. This is signifying strong pressure to the downside. You have the VIX going up, the ad going down, and the tick trending, starting to trend below zero as well. So it is important to keep an eye on market internals. And this is how I set mine up. I have the tick, the VIX, and the ad. And then I have the NASDAQ, the Dow, and the E-minis over here so that I can see what the markets are doing as a whole and where they are likely to pause, i.e. their 50-period MAs, their pivots, etc. And that's how I use these. If you guys need more detail on how to actually use these market internals, go ahead and click the links below. Take advantage of the course. It definitely helps to understand how to use these to your advantage. So go ahead and click the links below. Don't forget to subscribe, and I'll see you guys on the next one.